Welcome back, everyone. Tim Bohen here with Mike Huddie, going over all of your questions. You know, we love when you drop questions in the comments. It's the best way for us to cater these videos to you. And we've got a great question today that I get asked a lot. I know Huddie get asked a lot. And, you know, if you come up with stuff as you're watching these videos, definitely drop them in the comments. And keep in mind, if you like these videos, you know, we kind of, there's only so much time we can spend on YouTube to get into these concepts. We do the best we can, but if you're really looking to get in depth, hit the link below, check out the StocksToTrade team. That's where we spend a lot of time, 11 webinars a week, really breaking down the meat and potatoes, you know, the real digging in of these concepts, these chart patterns, all of this stuff. So check out the StocksToTrade team below to really get in depth in a 1-year co-mentorship program. So that being said, you know, Huddie picked the question today, and I was like, yes, great question. And you'll if you're on Twitter, you know, or if you're in chat rooms, which is great, you know, you'll hear people talk about, you know, hey, you're shorting the front side, wait for the back side, or, you know, hey, you're buying the back side, you know, your timing is wrong. So that's the question we want to talk about today. What is the front side? What is the back side of a chart pattern?
And so I guess for me, I'm really going to focus on the backside portion of it. Whether long or short, you need to be able to identify what is backside and what that means for, you know, the future possibilities of price action. And for me, what I'm always looking for is first and foremost extension. A stock where the candles, each consecutive green candle is a lot bigger than what the stock has ever done in its past. I mean, it's posting enormous volume and big percent gains. But what I really like, you know, sometimes it's not as clean cut, and you don't really, it's not a black and white answer. So what I'm always looking for to kind of fill in the gray area is I'm looking for a stock that is trading massive amounts of volume and having these big percent gains. And when I know backside is getting close is when it's trading even more volume at higher prices and making big percent gainers. Like I guess I can give an example. A stock goes from 5 to 6 is one day and it trades $1 million, and then 6 to 750 is the next day and it trades $2 million, and then 750 to 12 the next day and it trades, you know, 15 million. Yeah, the best analogy I can give. You know, and if you're familiar with candlestick patterns, I'll try and guide you through it. If you're not, remember we do a lot of videos on candlesticks. But what he's explaining there is that kind of that candle that every day the candle is engulfing the previous candle, where it's like, you know, in his example, day one was a $1 move. Day two was like a $2 move. Then day three was like a $5 move. So visually, think about how those candles are getting parabolic. And what I really like to look for is on that, you know, third, fourth, fifth day is when that volume also correlates to the big percent move. We call it exhaustion volume in a lot of scenarios where it's just the stock can't sustain that movement. But I still don't think that's backside. I still think, you know, on that third day where it's trading that massive amount of volume and it's posting that big percent gain, that's still it running up. And I still think that the momentum is towards the size of the buyers. And for me, when I really see backside, it's that first time it's gapping down. It's that first time that it's red on the day. It's a very significant trend change where longs have a reason for once, you know, in terms of the chart to get out of their position, and shorts have a really good reason to pile on. And that creates a lot of selling pressure relative to how many people are going to buy this stock when it's already made, you know, a 200-300% move towards the upside. It makes the pullback very predictable. So a great example, actually, you know, and keep in mind I'm very bullish Tesla, but if you bring up the February 2020 chart of Tesla, it's a great example of this. I mean, Tesla was uptrending. I mean, Tesla was basically green 99 of 100 days from October to like early February. And then look for that candle, bring up that chart. And there was one day, I don't remember the exact day, but it was like early February, and it was the biggest candle by a massive percentage. Then what happened the next day? First red day, and it slammed like $150 a share. Now, Tesla's probably grinding back by this point, but that's a great example of that exhaustion of the blow off top or whatever you want to call it, and then that first red day. And then it's so important to be able to recognize backside. First of all, I don't like to play guessing games with that. I don't like to say, okay, this stock is maybe putting the top and, you know, it cracked hard off these highs, and maybe this lower high is the start of backside. For me, it's never about catching the top. It's about what blatantly looks like backside, and generally it's that first time it's red. But what kind of helps that prophecy become true is that again, you just had that exhaustion volume pour in. A lot of people, who knows who these people are, but a lot of people bought this stock at excruciatingly high prices, and now the stock is going to fall really hard off those price levels. So it's going to be really hard for a stock to get back up there, because every time that stock kind of moves up in that direction, you're going to have people who are at the top wanting to sell and lose less than what they were losing 5 minutes ago.
Yep.
And so it creates what we call bag holders.
Yep.
And as the stock kind of trickles down and comes back to reality, again, the stock isn't going to be able to move the same way it moved, back when it was on day one of the run. And why is that? Because the dynamic of where the buyers and where the sellers at has changed so drastically that the stock is going to have inevitably a really hard time getting back up to those levels, creating what we call backside.
Yep. So what happens after that first big red day, after that parabolic candle, is you've now got everybody that got in at the frothiness. They bought at the high of the day the previous day before, and now that first red day, they're red, obviously. The stock's gapping down because they bought the high day before. So now any bounce is going to get sold into. Any of those weak bounces are going to be the bag holders saying, oh, I screwed up again. I didn't have a trade plan. I saw a stock at a high day. I jumped in. I'm a loser. I'm going to sell. So that's what creates these great short selling opportunities, because even if they bounce a little bit, that bounce gets sold into, and then it just fades back again.
And whereas before you have that exhaustion, extension on the daily chart get put in, those bounces don't necessarily get sold into. And so that's what happens when you start, bucking trend or shorting front side.
Yeah, because when it's the front side, everybody's buying the spikes because you've got that frothiness. So that's the best example of the difference between the front and the back side. When this stock's green every day, people are buying breakouts like crazy because they're like, I don't want to miss it. I don't want to miss it. Then you flip after that first red day, especially in junk stocks. I mean, I know I use Tesla as an example, but if we're talking penny stocks, everyone knows where penny stocks end up in the long term. Yeah. So any of those weak bounces get sold into, and the exact dynamic flips. So again, everyone, would like to thank you for joining in on these videos. These are the type of concepts we talk about every single day. And, I think we did an interesting job here, because you've got to think about that psychology. What are the buyers thinking? What are the sellers thinking? And this isn't the kind of stuff you necessarily pick up by sitting at your computer all alone every day, okay? This is the kind of stuff you'll learn from others that have been doing this for years, that have seen these types of moves. And I think the StocksToTrade team is the great way to do that. You can bounce ideas off Huddie and I. We've got a great community in the chat room. You can bounce ideas off new traders, seasoned traders. So check out the StocksToTrade team to join today. And as I mentioned, please subscribe to the channel, share with your friends, and ring that bell to be notified as soon as one of these new videos hits.